All right, Tony, try number 2. I hit the big red button. What's going on, man?
Hey, man. Having fun.
Having
Thanks
fun.
for having me on.
Of course, you're probably you're having a little bit of fun. We were just saying, probably dealing with a little bit of the fallout of a thread this weekend that's making its rounds on the internet.
Yeah, it's weird. It's less now. It's less fresh for people. And I muted that thread after a day because it was just getting too much to handle. But it's certainly been eye-opening to see how polarizing something I thought was totally neutral was for people. And it's sort of new for me. Like, I've been a person on the internet for a while, but this is definitely the biggest blowback that I've ever gotten. And it's been an interesting cycle of like emotionally managing what it's like to have people yell at you on the internet and be upset with you.
Yeah, it's sometimes I would almost wish people would yell at me in person. I think we're better suited to deal with that. I think in life you kind of have experienced that more. If someone's confrontational in person, whatever it might be, someone doesn't like you. On the internet, it's a weird thing. Like, you have this thread, which I thought was incredibly helpful, talking about how you can earn interest using DeFi and this compound craze. And then there's people that get upset about that. Like, it's tough to even understand where they're coming from. What's their incentive? Like, how do you deal with it? Like, it's just so weird.
Yeah, I mean, and my approach was always to kill them with kindness. Like, to your point, people don't act the way they do on Twitter in person because they are reasonable people and have learned to like survive in society and be sort of kind to each other just as a baseline. But on Twitter, you get points for dunking on people and like appealing to some like whatever base you're appealing to, and that leads to this kind of behavior. So what I did initially, at least, was when people were really aggressive, I would just be like, hey man, what makes you feel this way? And like try to understand their perspective. And people would almost always back down from their tone immediately in the next reply and be like, oh, like there's actually a person on the other side of this and I can have a conversation with them. But eventually it became like too many conversations. I couldn't keep up with it.
The mute button works wonders in those situations. And
it really does.
Just for the outraged people and for the unoutraged, who I imagine there's a bigger chunk of, we'll call them the silent majority here, of people that found the thread really helpful, like myself, but don't necessarily know who you are. Let's give a little bit of background there. I followed when you left Multicoin. I know you're clearly still focused on the space and genuinely interested in it, but what were you doing before and kind of what takes up your time now?
Sure. So my background's mostly in product. I've spent most of my career building products that are related to online communities or games, open world, social networks, things like that. And the motivation for that was really just to understand how people work and how we can improve our behaviors and how being together can enrich our lives and make us happier and more productive and stuff like that. So I got into crypto a few different times, early on with Bitcoin, but as a product person, I didn't have a lot of stuff to build on it. Big supporter of Bitcoin, just like not a lot I could do with my time there.
Yeah.
And then Ethereum really caught my imagination and I ended up digging really deep into the space. I ended up working on a project called Decentraland for a while. And then along the way, have been a really active investor, write a lot on my blog, tonysheng.com, and still do that. So for the last year or so, I was investing with Multicoin. Now I'll probably just be doing what I was doing before, which is writing more, investing, just having fun in the space.
You can probably still fill your time pretty well with everything that's happening lately. I mean, I remember not too long ago, DeFi and what Ethereum. I mean, when I joined, Ethereum was exciting to me because I tried to mine Ethereum on a laptop and like basically almost caught it on fire. But it was this idea that like, I could actually mine and could make money. And then I realized very quickly I wasn't going to make enough money. I'm not good enough with computers to do this. And then, ICOs obviously caught everyone's imagination for better or worse. But I think that narrative was pretty clear for people to understand. What was it that really caught your interest with ETH then? And then we'll kind of get to what it's morphed to now, because there's a lot of words being thrown around. There's a lot of new terms, and I'm sure some people's heads are spinning. But what was it back then?
Yeah, it's a mix of, if I think back on it, if I'm being really honest, there's a lot of parallels here to what's happening today. Back then, I would say like half of me was like, it's the technology. I'm a technologist, I'm a product person. This is a new medium to build products, and they have these like really profound promises of how they can change society. They're permissionless, governed by people. Facebook can't take it down. Like a lot of themes that I deeply care about personally. Sure. But I'd be lying if there wasn't a bit of like, maybe I can get rich. So I mean, you watch the asset prices go up, and I had been a holder of Bitcoin for years preceding that, and you kind of know, like, not only do you get rewarded for being early to the platform just because of like the intellectual opportunity and the ability to like contribute to a new thing that could really shape society, you also have this kind of novel thing where there are these tokens associated to it, and by being early, you can also be directly economically rewarded, and that like uh, I think that's happening again. I think people are going to start seeing some of the returns, like however modest they are, from just depositing things or using DeFi protocols and earning some yield,
Yeah.
and then stay around and just like you and me, like stick around, be people in this community, and it just grows and grows and grows.
Yeah, I don't think I think people kind of demonize that incentive of making money, but in fact, it kind of leads. I think it leads to other good externalities, like other good outcomes. I don't. I think it gets looked down upon, especially sometimes what I do, like trading. It kind of cracks me up. People are like, trading is bad. I can't believe he just trades. That doesn't kind of help the space. And it's like, well, what do you mean? These things wouldn't have prices anyways. That's how projects get funding. Someone has to invest. So yeah, I mean, it keeps everything moving forward.
Yeah, absolutely. And I think like it's one of the benefits of the space. Like there are lots of things that people should be complaining about and should say like this isn't right and we should move towards a better version of it. But um, there are financial incentives all around us. Like Uber gets us to take their cars because they subsidize it with VC money. Like I get cheaper grocery delivery for the same reason. So this kind of like financial incentives thing is just more hidden in other places. And I think it's actually a very positive thing that it's out in the open here.
Yeah. Well, this financial incentive that you wrote a thread about, it definitely caused a stir. I thought it was fascinating because even though I spend all my time on this stuff, I still kind of can't keep up with all the time what's happening on DeFi and ETH. And like I said, not too long ago, the narrative was quite simple. World Computer comes to mind. Then you have the ICO craze, which I think people could get behind. You buy some ETH, you invest in this coin that has potential to rise, and you can sell it for more ETH or sell it for more Bitcoin. This is like taking a flavor out of traditional assets, talking about yield, but also has kind of still a very futuristic DeFi kind of touch on it. Your thread that caused the stir, I was trying to think, how do I best frame this so people can learn alongside us, so I can learn? And I figured the best way to do this would literally just be to go down your thread. So you started this with, you can earn 100% annual interest rate using USD in multiple places on Ethereum right now. How? And then this is obviously where things went off the rails. So how the hell do you do it? We'll walk through and then we'll talk about risk. We'll talk about why some people probably got upset and all that. But how do you earn interest at the biggest kind of highest up level?
Yeah, so I'll start from the beginning because I don't want to assume everybody knows how savings accounts work. Because
Sure.
there's no personal finance class in American education. Um,
Bizarre.
and in short, like when you put money in a bank, they lend it out, and then they charge money to lend it out, and they give you some of it back. And that's like when I was growing up, I remember people telling me about compound interest and saying like, hey, if you deposit your money, you'll get 4 or 5% back every year, and then when you're retired, you'll have $1 million if you put in like $20 a day starting in third grade. And don't check that math. I don't know if it adds up.
That's
But
close.
it's totally different now. Like now we're adults and we're putting money in checkings accounts, and the interest rate's not 3 or 5%; it's 0.01%. Like those are the rates in the market. So that's I think like top level why people are really excited about the opportunity for new ways to get yield, or interest rates. So essentially, something similar is happening in crypto. Just as you can deposit your US dollars in a bank account and have them lend it out and charge a fee, you can also lend in crypto. And the way that people are doing it on Ethereum is through lending protocols, and there are a few of them, but the most popular one is Compound. So on Compound, there are a number of assets you can lend, including a few flavors of US dollars and Bitcoin and Ethereum and some other assets. And when you lend it, you charge borrowers some percentage fee on those deposits. And when you borrow, you pay that fee, and there's a spread in between them, which makes the market work. How do you get to high rates? Like we can take it step by step. Basically, the real driver of the high rates is a subsidy that Compound is putting out in the form of their native token. So users on both sides of their market, both borrowers and lenders, are earning some distribution of Compound tokens every day. I believe it's like 2,800 split 50-50 between borrowers and lenders. So if I deposit my US dollars into Compound, I get the savings rate that they're offering me, in addition to whatever share of that, so let's call it 1,400 compound tokens, are split across all of the lenders on the platform. So that alone has been pretty high because the rates are a function of the demand to borrow. And because people are getting rewarded for borrowing as well, the rewards are offsetting the costs of the borrow fee. So they're willing to pay very high fees, which leads to very high savings rates. So the whole system just starts to bubble up because of the subsidy that's being offered into the market. That's sort of step one. Like step one is you can start being a user of this platform, earn some of this compound token. Because the compound token is worth a lot right now, that is juicing up your all of the fees and offsetting any costs that you would otherwise be incurring on the platform.
Sure.
So I'll pause there before moving on.
I was going to say, so this is maybe where things get different from our traditional world. Usually as you're, lending, you're getting paid to lend. Obviously, you're giving someone else your asset. You can think about it as you deposit in a bank, even though they're giving you 0.01%, you're making money because you're giving them their money. The difference here is usually there's a cost to borrow. Whoever's now using your money or taking your money to put it to work usually has to pay. And since Compound is now incentivizing or subsidizing, you could say, borrowers, it's like everyone, you get paid on both sides of the trade. So not only do the people lending get paid for giving someone else their money to do something with it, but also the people borrowing are getting paid to literally take your money. That's right. Yeah.
And I think that's you might have heard the term yield farming being thrown around in the conversation. I think like the cycling of borrowing and lending is really what inspires that language, because people are lending one asset, using that as collateral to borrow another asset, using that asset to do something else, and then they can continue to cycle it through this platform to maximize the amount of compound tokens that they're earning. It's people are getting pretty creative.
Who's the first person to say yield farming? I mean, this meme.
I have no idea.
This meme is the first one. And
I was like,
it's amazing.
It's really funny. And actually, I originally was like, this is dumb and silly, which appeals to me because I like dumb and silly things. But the more I've thought about it, it's actually a great metaphor. And this was inspired by Vance at Framework Ventures. He was responding to, I think, Jesse at Andreessen, who said, like, we need yield farming is cute, but we need to move on to like something down the line that's like a good outcome from yield farming. But anyways, Vance was like, I can't think of a better metaphor than agriculture for community ownership and self-subsistence. And I totally agree. Like I think it's the perfect metaphor for individual people being able to come on to a network and then earn like a living, even potentially, by just being a user in these networks.
It's also this stark contrast of like, one of the oldest ways you could make money or provide for your family now kind of being ported onto one of the most futuristic ways people are making money, lending digital forms of money and earning yield because a company subsidizes both sides of the trade. I mean, it's amazing. And it has legs. Like everyone's talking about it. This is the first meme I think that ETH has tried or attempted a lot of memes. And I think, both sides of the camp, whether you love ETH, whether you hate it, kind of battle about whether each meme will stick around. But this is the first one, even if you hate it, it just sticks. Like you're talking about yield farming and the whole, like, I love it. I absolutely love it.
Yeah, I don't want to get too off topic and go back to like why people were pressed about this, but I think it is because they recognize the power of the meme. Like if the people that are upset, like consciously or subconsciously know that there's some meme warfare here, there's a scarce amount of attention and capital in the space, and if one meme really thrives, it's going to be at the expense of another one.
Yeah, we'll get to meme warfare. We'll get to the disgruntled readers right after this. But I want to continue on with the thread because we're making good progress here. Why are people that are borrowing, besides them being subsidized, like I know Comp is paying them, so people that are borrowing are making money, which is strange. But what are they doing with this borrowed money? Like, why are they so excited to borrow? How can they actually earn more than what cost them?
So if people want to take more risk, they take that borrowed money and then they use it to get more leverage. So that means like I start with $1 and then I just keep borrowing in different ways until I have $4 that I can put into the system and I owe back $3 plus a little bit because of fees and stuff like that. Mm-hmm. And so to make it really concrete, one really popular way to play this at the beginning was to deposit USDC, which is Circle's Circle and Coinbase's stablecoin, and then use that to borrow Tether, which is another US dollar thing, and then use that Tether to exchange for more USDC, and then deposit that again and borrow more USDT, and then cycle that through until you're maxed out, which could get you to like 4x leverage, I think.
So just to pause one more time, each cycle you go through gets you a little bit more leverage. That's why it's kind of repeating the cycle.
Exactly. Yeah.
Okay.
So that's how that obviously introduces you to more risk, because the more leverage you have, the more risk you take on.
Sure.
But because in the beginning stages, people were doing it all in stable coins, you didn't have the risk that like your collateral's spot price would drastically fall, liquidating your borrower or anything like that. So people were feeling a lot more comfortable doing it with US dollars. That's actually changed since then, which is an interesting development. But at the time, it seemed like a relatively safe way to leverage farm the platform.
The farmers are increasingly looking for bigger, faster ways to build bigger farms. They've moved on to new crops.
Ain't that just a metaphor for where we're at in society, though? Just people continuously moving up the risk curve faster than we would have thought.
Oh yeah, I mean it's happened a million times in markets. It's we think one thing works. Well, it's safe for now. Let's tack on a little bit more leverage and see how far we can get before this gets out of hand.
Yep.
All right. Well, that gets us. I think people understand at least the basic trade. We'll talk about other trades that are happening and where other tokens fit in. Where does the comp token kind of, before we get to the risks, because I think this is a really important one, how else does the comp token fit in? I know that borrowers and lenders are being subsidized to kind of participate in this platform. I imagine it's a really good bootstrapping technique, but what does the comp token actually do? Is it like a DEX coin? Can people think about it like that? Some people have said it's a governance token. What rights does it have? Why are people wanting to hold this thing?
It is a governance token. So you'll if you go to the Compound app, there's a tab that's vote, and you can see all the proposals that have been submitted and the voting people have done on those proposals. One thing that I think is highly underrated, something that people haven't really been talking about because they've been so fixated on the yield and the risk in the farming, is just like how amazing their governance modules are. Like I was having a conversation with my friend Lakshman, who's an Ethereum researcher, who just like dug into the contracts over the weekend, and he was like blown away by how mature this like governance mechanisms were. And you can see it in practice now. Obviously, like there are some growing pains, I guess you'd say, are just like unanswered questions on like what's the best way to govern these things. But essentially, what people are able to do with the compound tokens is use them to vote on parameter changes in the system. So some things that they've changed are like the collateral factor for USDT, which they can add or take away assets. They even use the governance module to kick off the compound like liquidity mining rewards in the first place. So the vision is like it's baby steps now. Like still the vast majority of the tokens available are owned by the team and investors. So it's not real like governance by the people yet, but the vision is over 4 years, over 10 years. It's literally just going to be the users of the platform making all the decisions.
And one of the things that I saw people maybe speculating on that they'll be able to vote in the future is that, I don't think this is happening yet, correct me if I'm wrong, that comp token holders will earn some chunk of the fees of these trades happening on the platform, or it's almost like they would be getting a dividend. That's probably a bad word to say because it makes it sound like a security, but that's what I always think of. And I imagine most people won't understand it like that. Is that a possibility? Has that been proposed?
I think it's certainly a possibility. I mean, the other side of it is easier to reason about, that the compound team couldn't make it a fee token. So this is really the only path that the project would have towards rewarding directly the holders of the tokens.
Gosh, I don't even want to go down this path. We'll go to risk next, but I have to ask it because I'm curious your thoughts. I imagine you've thought about it more than I have. Let's say, what's the difference if all the token holders vote that it should be a fee generating token or like quote unquote dividend token? What's the difference if the token holders do that versus the team? Is it because a centralized party didn't make the decision? Like, you know what I mean? It would still kind of sound like if the group decides it should act like a security, but since one party didn't decide it should act like a security, does that all of a sudden mean it's exempt?
I don't know, dude. I'm not a lawyer.
I'm not a lawyer either. It's just, who knows? That's such a gray area. Anyways. All right, go ahead.
Well, I'll just say I think a reasonable way to think about these issues is to delegate your trust into the lawyers that they're hiring and like
Sure.
the counsel that they're using, and you can sort of infer what the like state of the art understanding of the laws and regulations are. I the truth for all of this is that it's sort of all untested waters
Yeah.
and it's going to
Yeah.
be dynamic. So they're just doing their best guess at what is good, probably like leaning conservative even.
Yeah. It would just be fun to see. I guess fun for me, maybe not fun if you're a holder and you don't like which way it's going, but it'd be really fun to see if the community and token holders voted on something which maybe put it into gray waters, but the lawyers like you know what I mean? Does Compound have the right then to veto the vote if they think we shouldn't go down that path?
Well,
It's like,
that goes to like the distribution of the tokens.
yeah,
Like right now, it's highly like they basically still they have veto power over everything just because of how much they own.
sure,
Um, down like, and that'll be interesting because anybody can really propose this, right? I think
yeah,
they will within the next quarter. Somebody with all you need is 1% of the tokens to do a proposal. Somebody's going to propose it, and then I am betting it gets vetoed. But who knows?
we'll see. Anyways, let's get back to the thread because this is where things went off the rails. What we just talked about is pretty interesting. People now have a way to earn yield. This seems a little bit more conservative than the ICO craze, the ICO boom. It doesn't seem that wild that you would want to explore that idea and how it all works. But some people said this is too risky. Why the hell are you covering it? And I think even at the end of your thread, you said, obviously this model carries risk if you tack on too much leverage, but there's more risks. And maybe this is why people are upset. I'm going to give them the benefit of the doubt. We can explore that later. But some of the risks that I can think of, and then I'm curious to see the ones you walked through as well. There's been a lot of DeFi hacks, right? Maybe people are upset and they're saying, look, if you're putting money in DeFi, one of these smart contracts or one of these vaults that are holding your money is eventually going to be hacked. This is too risky to participate in. I imagine there's some people that are saying, all these tokens are worthless. That's just their view on tokens. So what are you doing? But what are kind of some of the more thought out risks that you walked through? I think you distilled it down to three.
Yeah. So there are three main risks here. One is that the where you're storing the coins gets compromised. So when you're lending, you're putting money in, and actually even when you're borrowing, you have to supply collateral to borrow. So you're putting money in. If for whatever reason somebody's able to drain those funds, you're kind of out of luck. And that's happened a lot in crypto. Like people all deposit a bunch of cryptocurrencies into a smart contract, and then either there's a hack or like a literal exit scam where the creators of it just steal it, or in one case it just got frozen. Like nobody benefited from it. It just like nobody could access it anymore.
Yeah,
So that happens and pretty frequently. So it's a really big risk and
sure.
one that it's the first things people should be thinking about. They should assess that.
It's a tough one too because that's one of the biggest benefits of this DeFi and decentralized exchanges and what a lot of these programs are proposing they can offer is that you don't have to work with a centralized party anymore. You get some of that counterparty risk out of the way. You get some of that custodial risk out of the way. But the risk is still there. It's just now smart contract risk.
Yeah, absolutely. And I think over time, just like so many things in this space, over time this gets fixed. And whether it's formal verification or just like the Lindy effect of some contract being safe for a long time or whatever it is, like you don't have to worry about it as much. But right now, these things are a couple of years old max. Like a lot of these systems are a few months old. You can have a lot of audits by experts, but there have been things that have been hacked that have been audited. So it's
Oh, yeah.
really pretty difficult.
All right, number two, you borrow too much and you get liquidated. There's probably some people listening that understand being liquidated on BitMEX because they tried to, get too long on Bitcoin or something. But getting liquidated on a trade like this, maybe connect the dots for us.
Yeah, so liquidation, just real briefly, is if you borrow something, you need to put down some collateral to make sure that you can pay it back, so you don't just run away with it. Most things in DeFi, everything basically is over collateralized in DeFi, which means like if I want to borrow $80, I have to put down $100 as a deposit. The systems decide when to liquidate you because they just want to make sure, very sure that you can pay it back.
Yep.
So as soon as the collateral gets close to the value of the borrow, then the system will say, all right, I don't want it to go down any further. I want to make sure I'm paid back in full. I'm just going to take the money you deposited and then close out your position. And usually it's, it really depends at where it gets liquidated. And so how this applies to this compound trade is like if people are cycling their collateral through over and over again, borrowing using or lending using one thing, borrowing with the other. If those ratios of like how much you supplied for collateral gets like out of whack with what you've borrowed, your whole thing can just get liquidated. And it's not just limited to saying like, if I deposit ETH and I borrow DAI, for example, if ETH goes down, I get liquidated. You can actually get liquidated between positions of like one version of US dollar and another version of US dollar if you're like leveraged far enough.
So that leverage would have to be 100x, would it not? Like, let's say I'm doing this trade with Tether and USDC. I know that sometimes the relationship is like 100 USDC to 99 Tether, but how out of whack does that trade get? Like, how are people really getting liquidated on that?
So it's not really a function of having that level of leverage. It's that the fees are extremely high to borrow. Okay. So their borrow balance is increasing at a rate that's much faster than the interest they're earning on the deposits. Meanwhile, there is still some FX stuff happening between the stablecoins. So it's not a one-to-one peg. There's always some minor variations. Sure. I don't know how common these liquidations are. I've seen a few screenshots of people posting on Twitter, but I don't know how like valid they are. But it is possible.
Yeah, I saw a couple Discord screenshots. It's, you hate seeing them. It's obviously people who kind of had no idea what they're doing. Maybe they did, and they just juiced up the leverage. But I've seen a few, and it's so hard to test validity. It's be really tough. Unless maybe we get a BitMEX Rex style of like compound. That'd be great. If you could actually see verified, are people getting liquidated? That'd be a fun way to track it, but for kind of an unfortunate event. Anyways, the third one, this is the one I can't wrap my head around yet. I was kind of curious to ask you. The value in the asset itself gets robbed. This isn't the smart contract being drained. This isn't, vulnerability like that. This is something else.
Right. So outside of crypto, basically every asset we hold, we just take it at face value. A US dollar is worth a US dollar. A bar of gold is worth a bar of gold. In crypto, there's more layers to it. So if you have a US dollar variant on Ethereum, it's not literally a US dollar. There's something behind the system that makes you feel like that's worth $1 US. Sometimes it's literally they've taken US dollar deposits and they're issuing these ERC20 tokens every time they get a deposit and burning them every time they get a withdrawal. Other times there's like complex systems behind it that like maintain the stability of the thing. Like for DAI, for example, it's all based on ETH loans and it has nothing to do with like US dollar deposits. So there have been a few instances where either the token standard was insecure and somebody was able to manipulate it to steal money. But the most simple way to think about it is I'm using this representation of the US dollar and the person is promising that it's worth this much because of some reason. If they're committing fraud and they actually don't have what they say, then the market would discover that and then the value of that US, like what you think is a US dollar, could plummet dramatically. So if you're yield farming with US dollar variance and you assume that it's the same level of security as just doing it with deposits at your bank, you're sort of wrong. Like it's hard to size the risk of this, but people were doing it with USDT, which is a really complicated asset. There's a lot of drama behind it, but there is some people think there's a material risk that's under collateralized. The market doesn't think so based on it holding its peg, but that's kind of thematically what the risk is.
So if that changes, if all of a sudden, we see a new news article that says USDT is actually a massive fractional reserve bank and USDT should be worthless, that's the risk.
Exactly. And so to make it concrete, every time you're supplying if you're lending something, you're implicitly long that token. You want the price to go up. If you're borrowing, you're implicitly short. You want that price to go down. And The reason for that is when it goes down, you can pay it back at a cheaper rate. So say you were lending USDT. If USDT loses half its value overnight, you're getting liquidated instantly. And you think it's like 1-to-1, you're fine, but something crazy like that happens, you're done for.
I mean, all this stuff, like this has just been so helpful for me to understand it. I imagine a lot of people listening. Where does the hate come from with this thread? I saw this thread. I actually think this made it to Forbes. I read a Forbes article over the weekend. Someone was saying, look, DeFi made it to Forbes. New people to the space are getting educated on what the hot theme is. Why the outrage? Why do you think?
Yeah, it took me a while to figure that out. I think there were three main objections. One was, this is risky. It's irresponsible to promote it. And I was a little puzzled by that because I felt like I wasn't cheerleading. I was just explaining. Plus, I had risk like all over the comments and inside of the thread. So I took that as there is demand for a discussion on risk, and that's why I followed up with the second thread on risk. And I think that's great. Like, I think people should be worried about risk, and that's something we need to constantly talk about in DeFi because it's so new and so risky. So that's one. Two was probably the loudest one, which was everything is a scam on Ethereum. That was sort of the implicit message that I was taking from it. And after I had a few conversations with people that were most upset, it really traced all the way back to the Ethereum ICO, where they just think Ethereum promises to be something that they don't believe it to be, and It had a pre-mine, and it's not fair, and everything on top of it's not fair and a scam. And there, I just like, nothing I say is going to change their minds.
Sure.
And I think that, oh, and then third, I guess some people are like, you're saying 100% APY, and I think people will take that as this is going to be a fixed rate, and actually these rates will go away and people will be disappointed. And that's true. And that's also something I mentioned. I think it's, I could have done a better job like emphasizing how variable they are, but I mean, I have nothing to sell, so it's not like I was trying to get people to deposit something onto my platform with this promise.
Yeah, you don't work for Compound. I mean, it wasn't an ad. Like, the other thing is, there's no way, there's no risk-free trade, first off. So there's always going to be some kind of risk associated with this. What is the actual rate right now?
It depends on what you're doing. So like the Curve pool, which was just stable coins, has ranged between like 30% to 230% over the last few weeks.
Yeah.
On Compound, you can still achieve, I think, 100% plus APY, but like the variables are moving very quickly. Like people are juicing it up with the really small cap coins like BAT and 0x. And then also it was a function of how the spot price of Compound, which was very high at times, and Coinbase just started clearing trades and it's gone down quite a bit. So it's going to be wildly variant over the next couple of days.
Twitter's a really tough place for nuance, and this is something that Pomp used to say, and I give him a lot of credit for me kind of understanding this. He had a lot of tweets back in the day, and I think your thread is actually a very good example of this, where if you really tried to dig into the nuance, and I actually think you still did a good job of that with the thread, but let's say your tweet was just one tweet, right? Let's say you just said you can earn 100% annual interest rate using USD in multiple places on Ethereum, which is kind of true, depending on the trade you use, and on Compound, that was true that day. Yeah. But it's like, if you tried to explain all that and you said you can earn a variable rate, like you'd lose almost the message. And it's not like the message is any less true just because you used 100%. It was true that day, even if it can vary. But it's a weird thing. Like you can't explain everything. That's why something like this is so great, or a thread is so great. I mean, it's weird that someone would be upset about that.
Yeah, I mean, I think that a lot of that has to do with just the party lines between Bitcoin and Ethereum right now. I think people, I think we were talking about this before we started recording, but actually I wrote a post a couple of years ago about how crypto can be seen as just a bunch of mass movements competing for like religious adherence. That was really popular amongst Bitcoiners, believe it or not. And I think, and the long and short of that is, you need like cryptocurrencies. I think the contemporary way that people are framing this is like crypto networks are social movements as much as they are like financial or technological movements. And social movements need a belief system, leaders, stories, like fables, myths, and that's how you attract new members to this religion. And that's like in modern terms, those are memes, and Bitcoin's is digital gold that served them very well. Ethereum's was world computer to start out with, and then it's shifted to like, I don't know what you would call the ICO era, but now there's sort of this like money Legos thing. And yield farming, I think like one of the reasons this got so much pickup is because it's clearly such a fun meme, and people think it's reaching a broader audience that has mass appeal. And when people that don't feel affiliated with the movement see them gaining steam, I think implicitly they feel like that's a threat to the success of their own social movement.
Sure, I find that that approach or that viewpoint, I just personally think it's wrong. I think Bitcoin only benefits from the entire ecosystem growing, but that's a whole different topic. But man, I'm not even farming and I still love the meme. I saw quite a few people have even included that farmer emoji in their names. It's all just so hilarious to me because there's like it's just such a weird contrast, but I love it.
Yeah. I think a bunch of us find it to be like have serious themes and like the prospect of changing society for good, but also want to have fun every day.
Exactly.
And then, but some people only want to see societal change and are annoyed that people are having fun.
It's yeah, it's a fun way to do it for sure. One of the last things I want to hit, and you mentioned this briefly. There's probably some traders that are saying that do want to juice this up. We've covered the risks, and people that listen to my show are probably speculators in nature. One of the most interesting trades I've seen happening on this is what's going on with, like you said, those lower market cap coins. And I'm not going to shill any coins. It's not what we're here to do. But coins like BAT, coins like ZRX are now part of this yield farming. First, it started with USDT and dollar kind of variance. How do basic attention tokens, ZRX, and tokens that have serious fluctuations in how much they're worth, how do they get used to kind of juice yield?
Yeah, because they're so illiquid, it's easier to move the rates on the platform by driving a ton of borrow demand. That by driving borrow demand, you drive the rates up. They're actually, because of their risk profile, they're on steeper curves on Compound too. So incremental money moves it up faster than other places. I might be wrong on the details here, but like directionally, that's the case. And so if you cycle your money from US dollar variance into borrowing a ton of BAT, which somebody did, then you end up with massive rates. So I think borrow went up beyond 30% for a while. I think it might still be there. And then lending for BAT went up 15 to 20%, which is enormous. And once they saw this, like the success of that strategy, they moved on to other liquid things, 0x, WBTC, etc. And so they're just like, I think like you can try to hedge it out because those are more mature like markets. Even though they're very illiquid on Compound, you can go on Binance and short BAT and
Sure.
long BAT on Compound or whatever, or vice versa, and sort of hedge that out. But it is definitely a much riskier strategy than doing just US dollar equivalents.
Yeah, it's I mean, like we said at the beginning, it's people are going to kind of start to tack on more risk as this evolves, and it's evolving faster than I think. It's fast, but I still think it's faster than maybe anyone could have anticipated.
Yeah.
Where do we end up in a month or two with this? You said next quarter, some of the more interesting votes are going to happen. Do you think this meme's going to have legs?
I think the meme will have legs. I think it'll be less. It'll be just kind of a thing that people know about in crypto, like it's just happening. And then every now and then there are going to be spikes, and people will get renewed interest in the idea. Rates will probably not. I mean, rates will not be 100% all the time, but there may be times where it's like way beyond that for certain opportunities for people. And it's all going to be driven by the total dollar value of the subsidies in the market. So individual coins that can be farmed, if those go up, that increases the likelihood that this goes up. Probably more likely it's going to be a bunch of different tokens hitting the market from other platforms. And that's it's important, like to go back to risk, like these are going to be newer platforms than Compound. So you got to be even more careful and make sure that you're managing your risk. But it's like big picture, right? Like people are going to come for the trees of this. Like I can make some money, and then maybe they'll see the forest. And the forest is like, this is a way to fund public goods on Ethereum. And this sort of ends up with these users having control in some shape of these networks. And if you think that's a good thing, then like directionally, this is something you should be at least curiously open-minded about.
Mm-hmm. I'm wondering what the hell happens to ETH here, like how big that effect is, because one of the first things that got my mind thinking about this, I was actually talking to Kyle Samani last week, and he was talking about quite a few DeFi projects, and he was one of the first people that I had spoken with that was like, I wouldn't say confident, I don't want to put words or anything in his mouth, but he at least proposed the idea that ETH might not be a direct beneficiary or benefit as much, I guess is the best way to put it, as just some of these DeFi tokens will, and as so much as these DeFi projects will, right? Like it's not going to be just because DeFi and Compound's doing very well, all of a sudden ETH has to take off. And I think that was in direct contrast to what a lot of people on Twitter were saying like 2 or 3 weeks ago, where they were saying DeFi and Compound are doing great. This is massive for Ethereum. And it's like the tides have turned again, where people were saying, I can't believe you would say that DeFi and Compound are doing so well that ETH somehow won't benefit from that. How do you think, the connection to ETH here is much more separated? There's way more parts in between than just the ICO boom. How do you think ETH reacts to what's happening here?
Yeah, I think a lot of it depends on the market structure. So if it's just like the same group of us sitting in a room playing with stuff together, like I don't know if it all cycles back into ETH. It's maybe unlikely actually, but if it's a lot of retail people coming in or even institutionals, like they're not going to right off the bat like build a portfolio of a bunch of DeFi tokens.
And they can't. They're too small.
Right, exactly. And eventually they might, like in 2017, people came into ETH for about a year, and then they like got more sophisticated, so to speak, and they thought they were like VCs and started spreading their coins around.
That's
everywhere.
Where it goes wrong.
That could happen.
Yeah.
Yeah, that could happen. I mean, I think it's likely to happen, right? Like you look at what's happening with Robinhood. People want the risk. They want the opportunity to become millionaires. Like, so it's going to happen. And I've stopped moralizing about it. Like I used to be really like, this is bad and we got to change this. But permissionless finance, like that, you gotta see the irony here. Like the point of this is to create a permissionless system. It means anybody can create whatever they want, and you can be like, I don't like that, but they're gonna do it. And you have to. What's more important is understanding how the system behaves in light of that. It's not to say like that I don't like this, because that's, I mean, it's not. It doesn't help like to change the practical outcomes of these behaviors.
Sure. It's like when Bitcoin's used by drug dealers. I'm not saying that anyone should sell or buy drugs, but that's also what makes Bitcoin so great is anyone can use it. It's uncensorable, right? Bitcoin is permissionless. I mean, that's amazing. So sure, there's going to be some nefarious actors, but the large majority is normal people. So, you can't pick and choose what should be good if uncensorable is one of the biggest components.
Right. And you can, like, I think people want control. I mean, you can like avoid participating in it. You can try to get your family to stop participating in it. You can get your friends, like, but your sphere of influence ends somewhere. And just, I think people are going to do what they want to do. And I think that's something, coming to terms with that is probably going to be a positive thing, because then we can start thinking about systematically, like, how do these things shake out, and then what can we do to improve it, rather than just like scream at each other on the internet.
Yeah, well, the screaming will always continue.
That's true.
Twitter's a great platform to yell at each other. Yeah, but in all seriousness, I do think, at least the way that I think about it, I think there will be a lot of investors that almost have to invest in ETH as a proxy to have exposure to this, whether they want to or not. So that's one of the beneficiaries. And then, I don't know, I'm going to have someone else on later this week where I want to explore a ton of different ways on what's happening with ETH. I'm quite excited about it, but I try to stay unbiased, at least when I talk about it. Otherwise, people say I'm shilling. I'm sure I'll get some of that with this anyways. Who knows?
Yeah, I mean, like, to your point before on like this is good for both Bitcoin and Ethereum. I mean, the way bigger picture thing is just like, are more people's eyes going to get opened up to the potential overall here? And if it does, then that means more capital, and that means good for everybody. Like and that's like, I think people miss the phasing here. Like, what matters way more is that first part. And then once that comes in, then you can think about like how you move it around. The reality is, like, if no new people come in and want to do this, we've actually picked the wrong thing to spend time on. Like, if this stays the same size, like, we should go find something that's more exciting to do with our lives.
Yeah, that's a tough one for me with DeFi and ETH. I mean, honestly, that's one of the reasons that kind of always keeps me being more skeptic than constructive. And I am still pretty constructive, but I'm always skeptical. It still seems very, very hard to start doing any of these activities. And I'm talking at a basic level, even things like a DEX. And this is quite a few steps past a DEX, right? Even using some of the wallets and plugins, understanding exchange rates, understanding dollar variance. I mean, this is like levels up the curve of how far someone has to understand what's going on here. So that's one thing I'm always like, how many new people will even be able to listen to what we just talked about? I'm sure they have a base understanding, but then can get involved if they weren't already in. That's the one thing where I'm always like, maybe it just takes time. Maybe these things will have easier verbiage as we go along. Who knows?
I think a lot of it, the key is going to be abstraction. And this is something we talked about as a community in 2017 and 18, and I think we'll continue talking about it. But a lot of the ideas from the ICO era weren't bad ideas. It was too early. And even just look at Compound specifically. Compound and Dharma were sort of complementary projects that both launched in, I think, 2017, maybe 2018. And Dharma was, I think, like a derivatives platform to begin with, but ended up pivoting to be front end for Compound. So they tried to make it easy for people to access these savings rates. Something like that takes into account all of the complexity we've talked about, and then just packages up, and it's like, hey, here's your 5% on your US dollars. And they use it like decentralized insurance providers and like all this other stuff to manage the risk, and then give you something that's like complementary to what you can get outside of crypto, and they just don't have to think about it. Like I think we're getting very close to that.
I think the mechanics behind what was happening, the one thing I'm going to pick on there, I think the mechanics behind what was happening in the ICO boom were great, and there were a lot of good ideas and ways things were, how we were doing it. I still think there were a lot of terrible ideas that came out of the ICO boom. a lot of terrible ideas were funded. I would say vast majority.
Yeah, I've been cleaning out my Google Drive because I'm out of my limit, and I found a spreadsheet that got sent to me of like ICO due diligence.
Oh gosh,
it was ghastly to say the least. It was disgusting.
There's a few metrics I'll never forget that people were seriously using to decide their allocations were like Telegram size, just absolutely ridiculous stuff. But it was a fun time to look back on, I should say. So, anyways, I don't want to get we're going to get too many more people yelling at us on the internet if we talk too much about ICOs. This was killer, man. This gives not only me a really good understanding, but I imagine there's quite a few people who tuned in that are trying to wrap their head around what are people farming, how does it fit into ETH, and I'm sure there are still some questions. So we might have to do this again as this whole thing evolves. But this was great, man. I appreciate you coming on.
Thank you for having me. It was really fun.
Yeah, this was awesome. So what else? Just to kind of wrap, what else do you spend your time on? Is people obviously going to follow you for this? What's your next thread going to be about? What can people yell at you about in the future?
I don't know, man. It's been a really fun time. I think activity's picking up, and I mean, what I do really is just like play around with everything I see, and then if something curious happens, then I try to break it down in really easy to understand ways and make observations about like where it's going to go, and hopefully that's something that's helpful and educational to people that follow. That's all part of like the main thread, I guess, which is like, where are the opportunities here? Who are the founders I can support that are building the really key infrastructure and applications that are going to let millions and billions of people come onto this technology and create a better society overall. So if you're interested in following along, you can find me on Twitter at Tony Shang and TonyShang.com for my writing.
Good stuff. I'll be sure to link it down below. If you're listening on Spotify, iTunes, any of that, I don't know what else people listen to on, but those are the two I listen to on. It's right down there in the show notes. You can click it. And if you're watching on YouTube, his Twitter page is right down below. Tony, it's been a pleasure, man.
Thank you very much.
Thanks. Cheers, man.